If you are using a regular accountant to do your taxes this coming year, brace yourself. Doing crypto taxes is going to be much more complex than in prior years. Why is this? Because you still have to do the gain calculation, but adding to that complexity, the centralized exchanges will be issuing what are called 1099 DA reporting. It's going to report to the IRS and to you all your transactions. Now, in prior years, these have been just a single dollar amount for the entire year, but now they're going to report every single sale, exchange, and transfer that you made. It's going to be many lines long. If you're a high frequency trader on a centralized exchange, it could be tens of pages long. Your accountant's going to get that. He's going to go, gee, I don't know what to do with this. It's going to absolutely terrify him if he's not extremely comfortable and confident in crypto reporting. And I believe this year, a lot of people are going to realize they really can't continue with their accountant anymore because they're not interested in knowing what you're doing. They're not interested in knowing how to report cryptocurrencies. They're uncomfortable because they have to say that they've completed the tax return with proficiency and professionalism. And if there's an area that they don't know anything about, they're not supposed to file a tax return with that in it because they're acting outside of their area of confidence. And I think this is the year that a lot of accountants will throw up their hands and say, no, Mas, I don't want you as a client. I can't do your tax return. In terms of doing your gain calculation in 2026 for the 2025 tax year, it's going to be very complicated because of the changes to FIFO-by-wallet cost basis accounting. Most people never did by wallet. They did it universal in the past, and most people did not use FIFO, so it involves a change. If you have a service or you haven't used a tax software product or the one you use does a universal change all years if you change it, well, that's not necessarily bad either. It might make it difficult to prove prior year calculations, but our suspicion is that the IRS is less likely to audit those. The new broker-dealer regulations that went into effect last summer require that taxpayers report their cost basis or track their cost basis using a FIFO by account method. Now, there are some slight exceptions to that. You can tell your centralized exchange like Coinbase, if they offer this service, instead of making a FIFO choice, you choose which ones to sell using LIFO or some other method, but you have to do it beforehand, before you've actually done the trade. Another thing you can do is to do specific identification where you tell the exchange at the time of the sale request that you want to use a specific lot. That is to say, coins that I bought at a certain time and date. Now, it is unclear at this point in time whether exchanges will even offer that service. It seems like it could be very frustrating and difficult for them. Secondly, while you can do that, you're going to create a massive headache for yourself later when, after the year is over, when you have to do your gain calculation. Because the gain calculation tools don't allow for an exception process to be done on this exchange and not on the other exchange. For example, you're transferring between wallets, and it all has to be done on a FIFO basis. If you want to do specific identification, you have to do it for all of them. And our experience is this will break down very quickly. Only but the smallest traders will be able to sustain this. And furthermore, let's say you tell Coinbase that you want to use a LIFO method or a HIFO method. So Coinbase, it won't be this year, 2027, they'll start reporting cost basis. They'll report it using your method. However, when you do gain calculation on all your other cryptos from other exchanges, from private wallets, you're going to have to do all that FIFO, but over there on Coinbase, you're going to have to do it LIFO. The tools won't work. It won't work. It's all going to break down. You've created such immense complexity. Even if you think you did it, it's just going to fall apart when you try to calculate it. You will only make your life hell if you do specific identification and non-FIFO reporting on centralized exchanges. We believe, watching the IRS, that they're going to have a significant step up in auditing starting in 2026. And the way they're going to do this is they'll be looking at unreported income. That is to say, they've gotten 1099 DAs and you don't account for all that income on your tax return, and that'll be a source of audits. When those audits do happen, I think they're going to look at some of the big ticket items there and ask you to prove some of those big items to see if you really can prove the cost basis. So this is all very challenging, but I think next year is going to be, there's going to be a lot of uncertainty. And if it's too much for you, you can contact our offices and we can schedule to have your gain calculated by our crypto analyst. A very important thing about the problem with cost basis tracking in DeFi, you're talking cross chain. I mean, obviously, you're talking about bridging from one chain to another. And there's several different methods of doing bridging. When you bridge from one asset to another, there's three different ways that can happen. One is there's an intermediate service provider who is taking your token. Let's say it's on Ethereum. You have a token sitting on Ethereum and you want to move it over to Solana. So this intermediate service provider will actually take your token and then bridge it. He buys this token, he keeps it, and then he gets another token on the Solana blockchain and assigns it to you. From a tax point of view, that would actually look like an exchange because you effectively sold it to one party and then that party gave you something back. Now, the net result of that exchange, their cost basis has changed if you do it that way. Now, let's look at the tax records, okay? What does that look like? Because you're doing this on a decentralized exchange. It's decentralized. A DEX does not issue a transaction receipt. A DEX does not say, well, congratulations, we moved this token from Ethereum to Solana, and here it is written on one exchange. It doesn't give that to you. Maybe when you're placing the trade or the transaction, you can save a screenshot, but you're not getting a transaction receipt. What you're going to get is on Ethereum, you're going to see that token moved off to some address. And then over on Solana, you're going to see a token arriving onto your Solana address. It looks like a sell and then something was given to you. So that's how it looks from a tax point of view. If you've been using one of the online tax calculation software products, what can you do? Some of these, they can freeze prior calculations and just go forward using a different method. Some tools don't do that. If you change the tax method, it changes it for all prior years, which you don't really want to have that if you've already done your calculations. So that's one way that you can approach it. That's an easy way to do it. If you're going to be using an online crypto tax tool, you're going to have to go in and connect those two events manually to make sure that you're not having a taxable event there. But that is something that these tools, these software tools, cannot figure out on their own because there's nothing other than a similarity of fair market value and similarity of time that would anyway connect those two transactions. That's why DeFi customers particularly come to CryptoTaxAudit because our staff specializes in doing that. We do it all day long. And we get people lower tax results as a result of doing a far better crypto gain calculation. To the point that almost all of our clients say that us doing the gain calculation pays for the cost of having it done because we get lower taxable gain numbers than online services that you do by yourself. Remember CryptoTaxAudit. We are the premier tax service for crypto investors that are medium and large investors, degens, because they know they get excellent gain calculation. We've done over 5,000 crypto tax returns. None of them have been audited on their crypto reporting. If you want to sleep well at night, you can go to our website, schedule a contact, talk to one of our directors of tax or crypto gain calculation or customer service. They're going to give you a wonderful explanation of what we can do for you. I hope you enjoy this information. Please like and subscribe and follow so we can get it out to more people. Thanks.